Hello, I'm Jessica Amir, Senior Market Analyst with Bell Direct. Investors often ask, how do I pick a stock? What should I invest in? Well, it's not easy to pick a potentially winning stock. However, if you create a solid and repeatable approach, it will help you potentially identify opportunities as soon as they come up. Whatever your time frame or strategy, here are 4 tips to potentially help you pick your next investment. Firstly, become observational. Notice potential trends forming around you and stocks that could benefit. A famous investor, Peter Lynch, said, "You could outperform the market if you do this." So look at what's taking place where you live, work, and also think about how you and your loved ones are spending money and how it's changed. Also think more broadly what's happening in the economy. Here's some examples. Let's say you notice more electric cars on your street. You also watch the news and see more countries are banning petrol cars. This might prompt you to think about electric car makers that could see more car sales, or even companies who dig lithium out of the ground to sell it to electric car makers. Or let's say you read the paper and you notice Australia is exporting more iron ore to different parts of the globe. And you also notice governments around the world are spending more on infrastructure like buildings, roads, and office blocks. This might prompt you to look at some iron ore companies, given iron ore is a key ingredient in steel, and iron ore companies could benefit from these factors. Secondly, determine if the company you have picked is in a growing industry or if it's benefiting from consumer behavioural shifts. This could act as a catalyst to helping the company grow. Then dive deeper. Determine if the company is growing its market share in the industry. Why? Well, companies who are growing their market share can see increased revenue and share price growth. A company will generally publish their market share growth rates in their annual reports or ASX updates. You can also check what's being reported in the media. Thirdly, and importantly, look under the company's hood. After you've identified a trend, found a growing industry, and determined if the company is growing in that industry, it's time to look at the financials to see if the company's earnings are growing, if its cash flows are rising, and if its debt levels are falling and are reasonable compared to their peers. What's key is companies with growing earnings, cash flows, and reasonable debt have a history of producing better stock market returns over time. For longer-term growth, also think about if these trends can continue over the next 3 and 5 years, as that's key for future share price growth. All these questions form the basis of fundamental research. If you don't want to do all the legwork, and if you're a Bell Direct client, you can access Bell Potter's stock research on the Bell Direct platform. Bell Potter's fundamental research highlights companies' financials and key catalysts to look out for. Bell Potter also give a 12-month price target and also flag the stocks that they cover as a buy, hold, or sell based on their detailed analysis. Whatever research you undertake, you can take your stock picking to the next level by pairing it with technical analysis. This is step 4. Use technical analysis and indicators to back your decision making. Some might deem technical analysis or looking at a company's charts as black magic. However, research has found that combining fundamental and technical analysis will give you a better chance of stock picking success. Put simply, technical analysis can help identify potential share price trends and can plot where a stock could grow to. Online brokers like Bell Direct offer technical analysis tools. The charts are simply a reflection of a company's share price history, and you can access technical insights to tell you if a stock is likely to move higher or lower, and also key prices to watch for. Whatever stocks you invest in or whatever your strategy is, it's important to understand markets move in cycles. So they go up and go down. But over the long term, markets go up. One of the best ways to put shock absorbers in your investment portfolio is to spread your investing across different sectors like financials, resources, consumer spending, healthcare, and energy. You can even go a step further and consider adding other investment products to your portfolio, like ETFs that invest in international shares. To access Bell Potter's stock research and the technical analysis tools mentioned, visit belldirect.com.au to become a Bell Direct client today.